profit if and you are always, practicing on those, strategies that we'll have. So we're going to look at, in terms of advancing trading, few things about advancing trading. Then we can get to the strategies that we have that you can be able, to continuously practicing all the time when you are actually, trading with us. Okay, all right. So again, guys, if you guys have a question, please, you can, stop me immediately, or you can write on a chat. Yes, I see Mr. Jose was asking if we do have a copy trade. We do have a copy trade, my brother, but the copy trade that we have, we run it under 360 capital. Under 360 capital. 360 capital, it's a Globex 360 sister company. That you can be able, to run that that allows us to run things like a copy trade, things like a PEM account, things like a MEM account, because it is registered from, overseas. So it allows people to actually, trade with a different, it allows people to register their product if you are registered in overseas. Most of the brokers that are registered here in South Africa, it's difficult because of the local regulations doesn't allow you to actually get into a copy trade or PEM account and so on and so forth. All right. So if you want a copy trade, of course, Jose, we can talk about it later. I can show you how it works. I can, we can even have a presentation about the copy trade just to help, each other. All right. So most of the importance when it comes to the advanced trading, So welcome, Mr. Bongani. Welcome, Grace. Spatele, welcome. Mokete, Mr. Mokete, welcome as well. I forget to welcome you. So the first one is the position trading. The position trading is one of the most important when you are trading, is because of it determine the positions where exactly you are opening the trade and where the trade is going to go, where you're going to take your profit, where you're going to take, maybe put your, for example, your stop loss. So this is a certain and advanced Forex strategy, as it is the top earnings trader. The main advantage of this strategy is that it requires a lot of losses daily attention, less daily attention. However, it can only be completed successfully with a careful long-term marketing analysis. So most of the Forex traders strategies are performed on a small time frame, meaning that the majority of them are actually the day trader. So if we are the people that look on a, what can I say? Let's say we are the people who trade on a day. We call the day, we are the day traders. And mostly what we focus is on a smaller time frame. We look at a smaller time frame so that we can get our position, we can get our entry level. Once we get an entry level, we start carry on with those trades. Okay, I can see the box. Okay, so Mr. Bongani is asking for practical example. Definitely, we'll jump in the chat maybe to try to do a little bit of practical example, how to get, to the smaller time frame, so that you can be able, to see it yourself, how you can jump in a smaller time frame and do the position trading. Okay, so another advanced trading is those people who trade during NFP. Definitely next week, Friday, it will be NFP day. The NFP, it actually means non-farm payroll, it's actually a report that comes each and every first Friday of the month. It's the report of employment in the United States that calculates numbers of people that are working, excluding people that are working in non-governmental organization, and as well as those who are working on the farmers. That is why it's called non-farm payroll. So these are the guys that they actually, just focus on the NFP, to enter on the NFP and capitalize, and take advantage of those events and start making money. So it is the major economic news released in the US once every month. Usually, this type of market news has several impacts on the day traders, as it can easily fluctuate a price of USD pairs for 50 or more pips. So it can move the price of United States dollars for over 50 pips, which is amazing. I mean, if it moves for over 50 pips and you press the trade, that's good profit that you can make out of there, right? And why not on jumping in and actually, get to that trade and trade the NFP. The main disadvantage of the trading strategy is that it is tied to the NFP release. So you can only apply on an NFP trading once a month. So if you are NFP trading, that means you can only do it once a month, right? If you want to collect, let's say, 50 pips at once, so you prepare yourself. You said, I'm going to trade NFP. You put your money. You analyze the whole month, how the dollar is actually performing. When you get on that 2:30 NFP time, when the news is released, you enter. If the market goes on your direction, you will be able to make over 50 to 100 pips. And 50 to 100 pips, if you put a good lot size, it's a lot of money that you can be able to make that. Then you close, you wait for another NFP. That's how other advanced people who trade does that. Because of they know that they only capitalize on one event only, and they make sure that on that event, they have enough money to be able to trade. So NFP is also likely a Forex advanced level of scalping. A few hours before NFP results are set to be released, the market begins to fluctuate, right? Your main aim here is to identify the possible results of the NFPs and then judge how the difference they will be from both the previous focus of the value. You can observe the value using the Forex calendar pages. You also have to make sure that you have enough margin to withhold any possible market fluctuations before the NFP results released. Right? So the most important, it might be before the NFP results actually, released. It's very important to notice that you can analyze, you can check the NFP all the way on a, Forex calendars. Those who are joining from last week, I think they know where to get to the Forex calendars. Okay. All right. The other advanced trading strategy that you can be, apply into your trading is called diversify of the your portfolio. So how to diversify your portfolio, how to build a diversified portfolio. I don't know here, whoever who trade at the moment, do we know how to diversify our money, our portfolio? Because again, if you go maybe do research about investment, the most important thing that they talk about on investment is to diversify the portfolio. They want, when you jump in, when you get in a global investment market, you can move the market, you can diversify, investing your money in a different product, in a different scenarios. That's another strategy that you can use to make a good money on your business or on your investment, right? So have you ever heard the saying, don't put all your eggs in a one basket? Essentially, this is a principle behind the portfolio diversification. A well-diversified portfolio looks to brand a variety of investment into a single portfolio. Instead of an investor risking all their money in one company, one industry, or one type of asset, it is generally accepted that it is far more prudent to create a diversified portfolio as a means of reducing the overall risk. We'll get to that. So how do we do that? How do we divest the portfolio so that we can reduce the risky on trading or on investing in any type of investment? All right. So first of all, the way in which portfolio that diversification reduce the risk. It's a fairly initiative. But let's look at simplified examples. Let's say that you put your eggs in a one basket and invest all your capital into one company. In that company fails, goes bad, so too will your investment will be able also to fail. So if one company fails, your also investment, if you put on a one basket, it will also fail. Yes, Mr. Jose, it's the practice of spreading your investment around so that your exposure to any one of the type of assets is limited. That sounds like a Google answer, my brother. Eh? That sounds like you went to Google quickly and search, you know. But anyway, it's more like the way you are saying, my brother. So now, if one of those companies goes bust, naturally your portfolio will feel the strain, but you will also still have 19 stocks to play, which may even end up on offset the losses from your one failure investment. Okay. So you can divest your portfolio amongst the industry. Investors can choose to diversify their portfolio across the different industry in attempt to offset the risk associated with those industries. For example, the shares of the company which produce oil will naturally tend to increase in value when the price of oil rises. So conversely, when the price of oil falls, the share of price of the companies tend to do the same thing. Therefore, if you own the share in an oil stocks and wanted to diversify your portfolio in order to mitigate against the risk of falling oil price, you could invest in an industry which has an opposite relationship with the price of the oil. So again, it's about understanding which one it correlates to each other. I once have the topic of correlations of the instruments. I think that was the most important also. Maybe by time goes, one day we'll be able to repeat that topic again, so that people should know if I'm buying oil, what else can I buy so that if that oil goes against me, this instrument can work on my favor, right? If I'm buying, for example, like a dollar and a gold, if you are buying a dollar index, definitely gold, it might fail. If a gold is picking up, the dollar index, it might also fail. Vice versa with a gold and a dollar index. All right. All right. So you can, as I said, we can divest within the companies. Okay, I think we already talked about the oil. Okay, now we're jumping in on the Forex trading strategies. The importance of having a Forex trading strategist. To start a trading Forex, you need to have a strategy that actually outfits your personality. We should understand the reason for having a trading strategy. Moreover, you should understand what strength and the weakness of your Forex strategy. There are mainly two types of Forex strategies that works: speculation and hedging. All right. Now I'm gonna maybe take a time on speculation and hedging. What you and me do mostly on trading, we actually speculate. All those analysis, all those strategies that we use, those are speculation strategies that we actually use in the trading market, right? Those are just to speculate where the market actually is going, where the next move of the market is gonna go, right? So those are actually speculation. Most of us, we don't know, you know, in terms of hedging. Some they are aware about hedging, some they do hedge, but most of the time I've seen a lot of traders, they don't know how to hedge. When they try to hedge, they end up having both trades on a loss, both two trades sitting on a loss, ending up blowing their account in a very, very few minutes, right? So what we normally do is analyzing based on speculation. We're speculating the next possible move of the market, where the market is gonna go. That's what we basically do. So most of the guys also, they use a pattern trading strategy. The pattern trading strategy, which is, we know this, a lot of mentors, they preach about this. They will draw lines and draw, figures, and then shades, draw underlines. They are all the pattern. They are all about patterning, finding the pattern of the market of that instrument is going, and then follow that pattern. Or all these patterns, they have meanings. If A, X, B, D, all of this, it has the meaning. If the market goes like this, it means something. It means when it gets to the D, the next possible move, it will be all the way up, or it might break to get to the X. So all these angles, they mean something. These are called the pattern. These are called the pattern trading strategy. A pattern trading strategy. So the chart pattern is the price action tool that is actually created with some trade line and a horizontal line, right? Okay. Let me mute you, Jose. Jose, you want to say something? Oh, you good? All right. So a chart pattern is a price action tool that is created with the sum of the trend line and the horizontal line. A pattern trading strategy is the integrated part of the price action trading. If we see the past performance of this trading strategy, we would see a long history of the providing a profitable traders in a very financial trading instrument. So all of these pattern, it's a price action move that actually based on a past previous move of the market. So we are predicting the future by looking at the past move of the market, right? So we are thinking that, okay, the future, it will be 1, 2, 3. The market, we think it will go all the way up by just looking at how the past move has been done. So we're going to jump in on a chart soon, just to see, just to familiarize ourselves with this type of a move, to see how we can benefit ourselves. Okay. All right. So good here. Okay, here's the chart. So now we are looking at a 15 minutes time frame. So these are time frame to those that they are new in here. This is code time frame, these numbers M1, M5, M15, M30, M1, H1, H4, D1, W1, weekly, monthly. These are called Forex trading time frames. These are all Forex trading time frames, right? So if you are a daily trader, we only focus on maybe minutes time frame. If you're a scalper, if you're a day trader, we can focus on a daily, maybe hourly time frame, right? Before we get a day or weekly, maybe hourly time frame. If you are actually, a scalper, you can focus on a minute time frame. So you can look the market on a minute, for example. What it means is each and every single minute, there will be a new candlestick formed, right? There'll be a new candlestick formed all the way. After a minute, there'll be another candlestick like that. 5 minutes, the same thing. Each and every time, there'll be a new candlestick actually, formed. Let me see. Okay, cool. A new candlestick actually formed. 15 minutes, the same thing. After 15 minutes, there'll be a new candlestick formed. So what I normally do, if I want to scalp, I'll go on a 30 minutes. Right? Go on a 30 minutes. And then first of all, highlighting the way I highlight the highest where it resist before, and then the lowest part and the lowest of all, right? Again, trend line, you can establish your trend line so that you should always know where the market is gonna, touch, or where the market is gonna be, moving to. So you can tell that this is a downtrend, right? But there's a possibility of the market getting all the way to this side. So if you look at on a 15 minutes, you can see that it touches on a trend line, and you can tell that the market, it might go all the way on a 15 minutes with the new candlesticks, goes all the way and touches on 11,222. So this is clearly, that can give you a very good entry. You can see that this is the next possible movement. It already touches, break this level, but it couldn't break all the way, pulls back, and then form another candlestick, didn't manage to break, and then it goes all the way up. This is clearly to show that this market, it might actually, continue buying, maybe getting somewhere around here at this level, or all the way to the top, right? So that's why this type of trade, it's called the price action strategy. That's why it's called the price action strategy. Any question? Any questions so far? So far, so good. Okay. All right. So let's just maybe check another instrument. I think Bongani was asking to demonstrate. I don't know, Bongani, does it make sense? Is it fine with you? Is it clear, or if I may say? So let me check a currency pairs. Let's say that one I was scalping on a Nasdaq. Now I'm checking GBP USD. Let's say I'm a day trader, right? So a day trader, first of all, I'm gonna have to go to the bigger, a little bit bigger time frame, maybe on a daily or maybe on a 4 hour. Between these two, I'm gonna have to check my market and analyze my market within these two, daily or 4 hour, right? Okay, cool. So first of all, let me say I wanna trade the whole day, go on a daily time frame. I can see it's been a lower trend, touches this level, the market now start, going all the way up. So first of all, what I like to do most is to indicate the levels of the market. These are very, very important. If you master doing this thing, that's it. This is where money is. If you master to understand these things, this is basically where money is, just to understand where to put these lines, right? And again, look at the reason why I'm putting these lines. I'm not just putting the lines. This is where it's been turning around, go all the way down, turn this part, go all the way up, turn this part all the way. Why we're putting this, it gives you the levels that from here to there, I can collect a profit. From here to there, I can collect a profit. From here to there, I can collect a profit. This is similar as the Fibonacci strategy. This is very, very similar as Fibonacci strategy. Again, another advantage is, instead of getting, confused of support and the resistance, once you are doing this, you already establish your supported and your resistance level. Hey, yes, the level of support become a resistance, like that. Level of support continuously become the resistance all the time, like that. That's basically how this strategy works. So now we have to identify the trend. You can see it's an upper trend. Here we go. Okay. Now when you go, you go on a 1 hour, or maybe we can go on a 4 hour. So look at how the market shows on a 4 hour. Possibility on a 4 hour, you see it has touched this level. This is another also key point. Maybe we couldn't see it when we check on an hour, right? We couldn't be able to see this. But if you look at it actually on a 4 hour, on a daily time frame, we couldn't see it. But when you look at it on a 4 hour, you can see this level. And you can see the reason why the market turned from this, because it resisted at this particular position. Right? Now you have a sense, well, okay, the reason why it turned is because of the previous, on the 21st September, it turned at the same position. Now, once it turned, what is the next possible position? So look at on a daily, give us the idea that it's going all the way up. But when you keep on reducing the time frame, it shows you that you can be able to trade in a very short period of time. Although the idea, it's a bigger idea of buying on a long term, but on a short period of time, you can sell the instrument. So you can sell it to all the way here. And if you see that the breaking, the confirmation candlestick shows, you can continue sell it to all the way down here. And then again, it's all about looking to the past history of the trade. So if we even scroll all the way back, when was this? 25 August, right? We scrolled all the way. When was this? 15 June. The line is still going on the same direction. When was this on top? 27 June. You know, we can keep on going all the way from this instrument so that we can be able to see where the market actually turned. Okay, so here it looks like the market has, okay, moved the direction. Here it is. So in a bigger time frame, you can see it's been all the way a sell trade. But through the sell trade, we can be able to collect a couple of pips up and down, up and down. Any questions so far? Questions? All right. Now, I think we only have 5 minutes for the Zoom session to finish. Today it was very, very short. Now, Mr. He was asking about the copy trade. Okay. All right. I hope everyone, you can see the reason why again I'm showing the copy trade again is because of the idea of diversing their portfolio, the idea of diversing your portfolio, right? So you can have a trading account that you do the actual analysis on your own and everything on your own, but also you can be able to have another account that is a copy trade. A copy trade, basically, it's your personal account where you put your own money in your trading account, but your account it's linked to a signal provider. Signal providers are the guys that they know how to trade. They've been trading for a very long time. They have a history that you can be able to check before you actually, start following them or start copying their trades. So this is one of the two that, if you want to be a good investor in a market, you can use the use of diversing portfolio through the copy trading. Okay, so a copy trade often confuses a lot of people with the social trading and the Miller trading. A copy trading consists of the copying the performance of the traders using automation, right? Today, the most popular copy trading brokers provide with the social trading services as well. This type of functionality provides the opportunity to study both the actions and the behavior of each trade. So how does the copy trade works is very easy. A copy trade, the investor has the option to automatically copy every operation executed by another trader to their own personal account. This does not involve an investor's giving funds directly to the fund manager. So this is one of the nice things, especially to those people that they're actually, you know, they've been losing money, they've been giving people money, and people, they've been disappearing with their money, you know. They've been giving people money and find out people, they're not actually, you know, having a good profit. This is another alternative that you can do. You put your money in your own account that you have 100% access, that you can withdraw anytime you want. You can actually, you know, stop trading anytime that you want. Anytime that you want. You can pause trading anytime that you want, than giving someone your money. And then the next thing, that person tells you that I've lost the money in a market. There will be a little bit of, you know, misunderstanding or untrusting to each other. Someone will say that, no, we don't know. I'm not sure that you actually lose the money, or maybe you eat the money, or maybe you just don't know how to trade. So this is another opportunity. Here's how it works. This is a signal provider. This is the guy that provides the signal. So he has his own trading desk. He does his own thing. He wake up in the morning, trade for his money. When he's trading for himself, for his money. He's not trading for somebody else. He's trading for himself, right? This is us copying what he's doing. We have our own desk, our own accounts, our own everything. What we do, our account is just linked to this signal provider. So what we do is just copying the trades from this guy whenever he's trading, copying the trade from this guy whenever he's trading. So guys, the Zoom is gonna cut in a minute. So maybe you can rejoin again once it's cut, so that we can finish up the copy trading. So the signal replication process is started with the signal provider, that guy that trades on his own. These are the traders who can follow. Let's suppose the signal provider decide to go long or to buy Euro USD for one standard lot. The signal provider then, via the broker, us as a Globex 360 or 360 Capital platform, opens a position from the signal provider, and the same position opens simultaneously. The broker then execute the order on the trader's personal account. So you open the position on a signal provider